Hello everyone, and welcome to this educational presentation of a great strategy to help you become a consistent trader. Welcome on this Saturday morning. We have a great treat for you today because I'm going to be actually repeating the same presentation that I gave in Las Vegas last week at the Traders Expo. This was a really in-depth webinar so that I can really help you become a consistent trader, and you're going to learn all the complete rules to one of my most consistent pullback strategies. For example, let me start off by sharing with you this chart here. This is an older chart in Netflix. It's a weekly chart. Now, just by what I'm going to be teaching you today, off this little share of bar charts we have here, going back roughly about a month or two, you would have been able to signal a buy setup. And you could have taken advantage of it to take a quick maybe 15 or 20 points in 1 week, or if you wanted to exit later after that 1 week's gain, you could have held on as long as you wanted to for a total of 270 points in 1 year. You had the potential to capture that. And so this is going to be a really simple process to learn this today. Once again, you'll have the complete basic entry, exit, and stop placement rules today. And we're going to show you how simple it is to execute on our platform, the PTS Primo charting platform. All the examples you're seeing today were generated on our platform, and we really strongly feel that this is the platform that teaches you how to trade. So welcome once again. My name is Steven Primo, president and founder of Specialist Trading. If you're new to my Saturday webinars, we are all about educating you. In fact, I teamed up with Pro Trader Strategies 9 years ago with one goal in mind, and that was simply to educate you as traders, because that is the one thing that's missing from most traders' methods. It's not that you have a strategy that's faulty or that you basically don't have enough experience or enough knowledge. It's mainly that you're giving your power away. You're letting someone decide what to buy and what to sell. I mean, look at your own trading process. Do you go to a blog every day to find out what someone likes or what someone's touting? Do you listen to all the gurus on TV, or do you wait for every news announcement to come out like earnings or economic reports to help you decide what to do? This is really giving your power away because you're letting something else decide whether you should be buying, when all you should be letting you decide is the chart in front of you. Everything you need to know is right in front of you. So that's what we teach you, so that you don't have to rely, and most especially spend tons of money on people or things that are supposed to have the right answers for you. Because if that were true, then why do 80% of all traders fail? So it's really not true. So I've been trading for 41 years now, and trust me, I've gone through most likely the same things that you've gone through. When I first started trading 41 years ago, I was doing the same thing that most of you do, relying on news events, looking at earnings, looking at support and resistance, finding out what all the institutions were doing, listening to trading gurus. And trust me, it didn't help me make money 41 years ago. So it's not about to change and start working now. I was lucky enough to have some mentors that taught me the same things that I teach in my courses, and these are what have been able to sustain me now for 4 decades. So hopefully they'll be able to do the same for you. I'm going to give you all the complete rules to one of our most consistent pullback strategies, but before we begin, as always, we're first required by law to share our disclaimer with you. So please take a moment to view it. I'm going to show you a lot of performance results using this particular method, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples I'm about to share with you are strictly for educational purposes only. So as you take a brief moment to view our disclaimer, once again, I would like to, if you haven't done so already, invite each and every one of you to follow us on Twitter. I post a different thing every day, a couple of things, usually anywhere from little bits of financial wisdom to signals that our strategies have generated, all for educational purposes so that you can learn from it. So feel free to follow us on Twitter if you haven't done so already. There's our handle right there, at SPCLSTTRADG. Okay, so once again, our philosophy is to teach you how to trade. Remember, a good mentor does not trade for you. If you're going to a website or you're going to a chat room where someone furnishes you what to buy and sell, that's not a good mentor. A mentor gives you the education, but he does not trade for you. He teaches you how to trade. So that's our goal at Specialist Trading and Pro Trader Strategies, to teach you how to trade with the Specialist Edge. This is the same edge that turned my trading around some 4 decades ago and has sustained me for 4 decades. Hopefully it will be able to do the same for you. Now, this is going to be an educational classroom today, and just like a classroom, I want to take all your questions, but we have a good crowd here on a Saturday morning, and I do not want to take your entire day up. A lot of stuff to do. I'm sure you're getting ready for Thanksgiving and the holidays and just want to relax over the weekend. So please, if you have a question, wait till the very end of class to ask it. I promise I'll get to each and every one of your questions, and I will only answer one question right now, and that is the most common. That is this being recorded? Yes, it is. Many times students will have technical difficulties. You can't see or hear the screen. Oftentimes, if you log off and then log back on again, the problem is with your own internet connection. So try that if you're having difficulty, technical issues. Or if you have to leave early, don't worry. We will furnish everyone with a link to this recording today. So once again, we have a good crowd here today. I don't want to take all of your time asking questions. So if you're having technical issues, remember, once again, log off and then log back on. If you can't hear or see the screen, it usually is your internet connection. If you have to leave early, we will give each and every one of you a link to this recording, okay? With that said, let us begin. All right, what we're going to be talking about is strategy number 1. This is one of the first strategies I was taught some 4 decades ago. And let me share with you some of the highlights of this strategy. It is a trend following strategy. I'm going to show you how we determine what the trend is and its intensity level from 1 to 3. If 1 were the most intense of all strategies, you couldn't leave your computer, and 3 were the most relaxed, you could just enter an order and walk away for a couple of days. It's a very moderate number 2 intensity level. The entries are based on pullbacks. If you're not familiar with what a pullback is you're looking for an uptrend. Once you've established an uptrend, you look for price to sell off, okay? Where most people think that's the beginning of a downtrend, we know that we're still in an uptrend, that we're still going higher. We're just looking to buy at a lower price, all right, before the trend resumes back up. Same thing with a downtrend. We're looking for a downward direction of price. In that downward direction, there's usually these little blips or these little rallies where most people think that's the bottom. We know that that's just a pullback to the upside, so we're looking to sell at a higher price before it goes lower. Now, the beauty of strategy number 1, it can be applied to any time frame, any market, and any direction. Now, I'll show you slides today in all markets and all time frames, but the majority of slides will be on stocks. Don't worry if you think like, well, I don't trade stocks. I trade currency pairs or I trade the E-mini futures. That's fine. 1 can be applied to any time frame, any market, and any direction. It makes absolutely no difference. And then lastly, our edge with all of our methods, with all of our techniques, is consistency. And sure, someone would say, well, sure, yeah, I want to be consistent. But consistency really means that you will have losses from time to time. And that's okay. There's so many webinars, there are so many educators out there that say, we never lose, we generate thousands of % for you per year. But that's ridiculous. I've been trading 41 years and I still lose money. I lost yesterday, but the beauty is that you want to have a method that makes it back. My first couple of trades yesterday, I lost, but then I was able to make it back later on in the day. That's what consistency means. So it means just because you have a loss here or there, not to go and and lick your wounds or go and pout and say this thing doesn't work. You have to stay in the game, because if you have a method that's consistent enough, it will be able to recapture those gains and make up for those losses. That's what strategy number 1 is. Along with all of our methods, it's extremely consistent. In fact, I'll show you a couple of losing trades in it and how I was able to recoup those losses on the very next setup. All right, now here are the indicators for this particular method. We're only going to use 2. The first one is our most favorite, and that's the 50-period moving average. We call that the buy-sell line because basically if price is below, we are only looking at the market from a seller's bias. If price is above, we're looking at the market from a buyer's bias. So it doesn't matter what time frame or what direction, that's going to tell us whether we should be looking to buy or sell. And then secondly, we're going to be applying the 21-period dodging channel. It's a very common tool, but some software packages don't have it. You can find it on the internet. It's on, I know some like TradeStation or Metastock have it. The beauty is that this is all pre-formatted on our PTS Primo charting platform. So there's nothing you have to do searching for these tools or the time frames. Now, for those of you who aren't familiar with how the dodging channels work, let's look at this generic chart here. Now, obviously, someone looking at this would say, well, yeah, we're in an uptrend. Once you apply the 21-period dodging channels, look how they hug that. Now you see we have this kind of a stair-step approach. We have up, sideways, up, sideways, up, sideways. Now we want all these to all be going in the same direction. At the same time, when the trend changes, look how it hugs it, and look how price hugs the downward direction. Now, one thing we have to make clear here is that these dodging channels, these three dodging channels, the upper, the middle, and the lower, are not in sync. As we can see here, here's an example where the bottom dodging channel is going sideways. And if you look at the middle and the high dodging channel, they're going sideways, and then they go up, they go higher, they go higher. Whereas the bottom one is going lower. So someone would say, well, Steve, they're out of sync. They're actually not. They're still going in the same upward direction, because you have to ask yourself, if they're going sideways, where was the last setting? If the last setting was lower, well, then this is just a pause in an upward direction. The same, this was a short pause. The same, this was a short pause, and so on. It's not until you see a downward or opposite direction that the trend has changed. So this is what we're trying to do. We're trying to have them all going in the same direction at the same time. All right, let's take the buy rules step by step. And don't worry if you don't copy all these down, because remember, this is being recorded. We will furnish each and every one of you a link to this recording. So if you don't copy it down, there's no need to worry. You will be able to view this recording over and over again. All right, step by step. Step number one, price must be above the 50-period moving average. And when we say above, we mean it would be ideal to have all the bars above the 50, but ultimately, all that's required is for your entry in this particular method to be above the 50. All right? And then secondly, all three dodging channels must be headed in an upward direction. So we have two things here. We have the overall trend with the 50-period moving average telling us that we're going higher. And we have the short-term trend with the 3-period dodging channels telling us that we're going higher, because they're all going in the same upward direction. So if we look at this generic chart, the first thing we see here is that we are above the 50. That's great. Once we apply the dodging channels, we see that they're all headed in the same upward direction. Remember, once again, they do not have to be in sync. As you see here, at this point, the upper and the middle channels went higher, whereas the lower one went sideways. So someone would say, well, Steve, they're not in sync. Yes, they are. I mean, they're not in sync. You're right. But they're all going in the same upward direction, because if we look where the previous setting was on the lower one, it was coming from a lower setting. So that just means we've gone higher and we're pausing. Not until this goes lower, or any one of these go lower, are they out of sync with each other. Okay, step number two. Now, as price is increasing in value, as it's going up, as we see here, it tends to touch the top Bollinger Band. See how it touches that? So the rising price bar begins now to decline and is now completely below the midline channel. This is going to be called our setup bar. So that's what this looks like. We start to go higher, and as we're going higher, we're hugging this top line. But now we start to get a sell-off. This is our pullback. And as we sell off, we touch and intersect the midline. But we're looking for a bar that is completely below. Do you see how this bar is not even touching the midline? This is going to be labeled in the sell-off. Once we go below that midline, this is our setup bar. Now, this does not mean we're going to set up to buy right at the market, or we're going to, entry right then. No, it's setting up for an entry. Now, we're going to enter long on the first confirmation of price trading above that setup bar. Okay, so as we look here, we're not going to simply buy at the market. We have to have confirmation that we trade one or two ticks above. Now, notice that I said we trade above there. We do not have to close up there. All right? Many students have a problem with this strategy. They say, well, Steve, I didn't buy because we didn't close there. Well, we're not required to close there. All that's required in the basic format is for it to trade there. So we could trade here, go a little higher, and then close down on the day. That's fine. And as you can see, we enter the next day. That's where your entry would be, because we traded above. Now, people say, well, Steve, where exactly is that? Is that one tick above, 50 cents above? It's entirely up to you. This is why we say paper trade our methods, because some students like to wait for one tick above. Others like to wait for a full point if you're trading an expensive, $200 stock. It's entirely up to you. This is why you have to become a part of the process. This is not a system where everyone trades the same way. We do not teach, nor do we trade systems. We don't believe in those. You have to be a part of the process. So where someone would enter one tick above, another trader may enter 50 cents above. That's why there are no statistics or numbers or any type of back testing with any of our methods, because everyone is encouraged to trade differently. Now, I'm giving you the basic format, but in our course, we have different areas for entry, different areas for stop placement, and different areas for exits. All right, so let's say we're in the trade. Place your protective stop below the lowest low of the pullback. So remember, we entered right here, but prior to entry, the price of whatever we're trading was going lower. Where was the low of that sell-off? Well, it was right here. So that's where our stop's going to be. And once again, it's entirely up to you. 1 tick below, half point below, a point below. This is why you need to first paper trade to get an idea of where you want to place your stop. But it should be right below the low of that sell-off. Okay, so we've entered and we've placed our stop. So if we're wrong, we're going to lose this amount from this entry point to this stop. What happens if we're right? Where do we exit? Well, here's the basic exit for this particular format here. We're going to exit when price touches the top or highest dodging channel. That's the basic format. Or you can apply discretion and hold on to the position for as long as you'd like. This is where you become a part of the process. Once again, in the course, we teach you how to stay in the trade as long as possible, but we give you options. Some of our traders like to say, well, Steve, I'm in and out after a point. I just want to take a quick trade and get out and go on to the next one. Is that wrong to do? No. The only thing that's wrong is when you go to a chat room and blindly follow what someone else is saying, or a trading room. The only thing that's wrong is when you wait for earnings and figure out, well, are they good or bad, and then decide to make a trade on that. The only thing that's wrong is when you turn on the TV and listen to what the so-called gurus think you should buy or sell. That's wrong. Why? Because you took yourself out. You're basically telling the markets, I don't know what to do. I'm not educated enough. I'm not experienced enough. I just don't know how to trade. So I'll let you tell me how to do it. That is a recipe for a disaster. That's why 80% of most traders fail. Our goal is to give you the education, all these different variables for entries, exits, and stops, but let you decide. So some of our students, once again, will exit at the high dodging channel, whereas others will simply hold in and stay as long as possible. There's no right or wrong way. Once again, the wrong way is when you take yourself out of the game and rely on someone or something to tell you how to trade. That's so wrong. Take it from someone who tried to do that 41 years ago. It doesn't work. You have to be a part of the process. So as we see here, if you decide to use the basic format, you'd simply wait for price to trade and touch the top line, and that's your exit. Not a bad trade, huh? And you see that this was all done without the help of looking at news. This was all done without the help of seeing what the institutions were doing. This is all done without you going to a chatting room or trade room or listening to gurus or listening to volume. It's very simple. We're only listening to the chart in front of us. We've put a little structure on it. We put some little guidelines, and then we just follow along. All right, I'm going to go real quickly through the sell rules. They're the exact same rules. We just turn them upside down. So remember, I'm going through this quickly because I have a ton of slides to share with you. I've noticed that over the years, you learn much better when you look at a particular setup or example. So I'll go through the rules quickly, and don't worry, they're the same thing, just turned upside down. Price must now be below the 50, and all three dodging channels must be headed in a downward direction. Same thing, we're below the 50 period, and the dodging channels are headed in the same lower direction. Not in sync, as you see here, as this one was going sideways, the middle was going down and down. That's okay. They're all coming from a higher setting. The declining price bar now that's hugging, this time the lower dodging channel, begins to rise. This is our pullback to the upside. And we're looking for a bar that is completely above the midline. This will be called the setup bar. So as we go lower in a strong downtrend, you see how price touches this lower dodging channel. But at some point, it's going to start to increase in value and rise. This is the pullback to the upside, as you can see here. We want to look for a bar, not that touches the middle, but is completely above. And we just barely are above that midline. All the while, we're still below the 50, and the dodgings are headed lower. This is going to be called our setup bar. Now, just like before, we're going to enter to go short, but this time on confirmation of price trading below the setup bar. So instead of selling at the market, we want confirmation that we're going lower. We want to sell 1 or 2 ticks below, a half point. It's up to you. And once we do, that's our entry point. We would have entered right there, and we entered to go short. Now, You are free to decide how you want to trade this. We know a lot of traders do not like or have enough account size to actually short the stock. That's okay. You can buy puts. Remember, you are in charge. I'm not going to tell you, no, you can only short the actual stock. Why not buy puts? Why not get some type of spread strategy that has a bias to the downside? It's up to you. You are in charge of how you want to implement this setup. All right, so we've entered. We're going to place our protective stop above the highest high of the pullback. Remember, prior to entry, we had a nice rise in price. Where was the high of that little bounce? It was right here. So we're going to place our stop anywhere above here, okay? So if we entered here, and if we're wrong, if all of a sudden price goes up, well, we'll exit somewhere around this level. Now, where do we get out if we're right? Well, just like going long, we're going to exit or cover when price touches the lowest Donchian, or we can use our own discretion and stay in as long as possible. So let's take this on a day-by-day basis. So we're short, we have our protective stop, and we just simply wait. Trading is like, I always say, I said this in Las Vegas, it's like fishing. You just enter your orders and you wait. You're either going to be wrong or you're going to catch something. In this case, we caught a nice trade to the downside. It took a couple of weeks, but ultimately we could have exited right there. All right, so we have the basis and the format for strategy number one. Let's look at some trade examples that happen. Some of these are maybe a month or two old. I'm going to show you some at the end of this presentation that are happening within this past week, okay? And remember, we make it simple for you. You can do this on your own platform, TradeStation, Metastock, a host of other platforms, but we make it so simple because everything is one click away. You won't have to upload anything. You won't have to go searching for the Donchian channels and change the settings to 21 every time you want to use this. It's all pre-formatted, okay? So this is the platform that teaches you how to trade, how to check your work. Remember, in our courses, we give you all the rules and we teach you how to trade, and we want you to spot these setups on your own. But we also provide you on the platform with up and down sell arrows so that you can check your work just to make sure that you're in line with the strategy. All right, so let's start off by looking at some stocks, okay? And remember, once again, for those of you who have a good crowd here today, if you joined us late, remember to keep questions till the very end. Okay, here we're looking at CRM coming in the summer. All Donchians are headed higher. We're above the 50. Now, this is where we mean where our real rule is telling us that we should enter above the 50. It's a little bit more aggressive, but we're sticking with that because, as you can see, we closed below the 50-period moving average. So where students would say, well, Steve, I thought we're supposed to be above. Remember, if this is the setup bar, here's the first bar below the midline, right there, where would our entry be? Our entry would be right here. And in relation to the 50, is that below or above the 50-period moving average, this green line here? That would be above. So it's still okay. It's a little bit more aggressive, but it's still a valid setup. So we would enter right there. On the next bar, we did enter. You see how we traded above? We didn't have to close there. In fact, we closed lower. And this is where students will say, well, Steve, this doesn't work. I entered, and now we closed lower. I have a loss. Just like anything else, you have to give it time, all right? This is not a system where you never lose or you're never down on the day. You have to let the trades grow. So we entered here. Now we place our stop right here. So if we're wrong, here's where we're going to be stopped out. But we're in the trade, and look what happened. You stuck with it, even though that one day you were sitting there worrying and you couldn't sleep that night saying, this doesn't work. Why did I get involved in this? Well, yes, it did. You would have exited with a 9-point gain in the next month coming into September. EA, now we have the Donchians headed lower. Now you can't see the bottom one. We came from a higher price, trust me. We are below the 50. And here's the rally. We start to rally. As we rally, we touch the midline, and now we have a bar that is completely above the declining midline. This is our setup bar. Are we going to sell at the market? No, we're going to wait for it to trade 1 or 2 ticks below, or however low below you want to get. It's up to you. You can buy the put if you'd like. We entered short on the next day. Now we see that this is the rise prior to our entry. Where was the high? The high was right here on the day we entered. So we're going to place our stop right there. And in a little less than a week or over a week, we actually made 8 points, or we could have stayed in longer if we wanted to. How about MU? Okay, we're below the 50. Obvious that the Donchians are headed lower. Price is hugging the bottom, and then we start to rally. This is the pullback. We start to touch intersect the midline. We're still closing above what we're intersecting. Here's our first bar completely above. So this is going to be our setup bar. We'll go short, but look what happened. We never traded short below there. And some would say, well, I guess we're not going to trade that one. I'll look for another one. Well, no, you don't have to, because we're still below the 50. The Donchins are still headed lower. So we just move our stop up here. So now if the trade is going to be a winner, well, we're going to get short at a higher level. And you would have done that on the very next bar. You entered short, you place your stop up here, and then look what happens. You get stopped out. You lost 1.5 points. Let's say you lost 2 points, okay, just to make it even. You lost 2 points. This is where students go and play the blame game. They say, this doesn't work. This is a guy's a fraud again. This stuff doesn't work. Remember, you have to know that our methods are consistent. We're not trying to catch a winner every time. It doesn't work like that. Nothing works like that. Everything in life has a 2-step forward, 1-step back approach if it's consistent. So that's what we're searching for. So just because we have a loss here doesn't mean that it can eventually turn into a buy. Because if you had stuck with it, you would have seen another setup was generated. You could have gotten short and taken advantage of a 7-point gain. And that would have made back your loss and some more. Let's look at another setup here in Apple. Okay, now this is a daily chart of Apple in September coming into October. As you can see, we're hugging the top line. We come down and touch the mid, and then we rally again, but now we sell off again. So we would not have done anything here. We wait for a bar that's completely below, which is right here. Here's our setup. We're going to buy 1 or 2 ticks above. It's up to us. And we entered the buy, and we don't have a profit at the close of the day. We're breaking even or losing a little bit, but that's okay. And look what happened. We gained 10 points in the next couple of weeks coming into October. Now, as a beginner, as someone who's just starting to use this, you have different variables for exits. But if you are going to be trading this, we always suggest, remember, it's up to you, for our beginning traders, as they're getting a little bit more experience learning how to use this, to exit at the top Donchian channel. All right? Why? Because many times you'll see the trend change, and you don't want a winning trade to turn into a losing trade. It's the worst feeling in the world. And even though you may have moved your stop to break even, that's okay. We teach that in the class, that once you have a certain amount of profit, to move this stop to where you entered. But you still know that if you had used the standard exit, you would have made a quick 10 points. So in the beginning, while you're paper trading, we always suggest a paper trade. Always define your trades by exiting at the top Donchian, or the lower if you're short. And then as you get more experience, then you can experiment with staying in the trade longer, okay? And you say, well, why wouldn't I just use this all the time? Well, let me give you an example here. Because as you get a little bit more experience, here's a setup to go short in Tiffany. All right, we are above and nothing happened. So we move our stop up again. And we got short. We place our stop up here. So we're going to enter here. And if we lose, we're going to get out here. And guess what? In about 4 days, we would have made 8 points. But if you have a little bit more experience under your belt, we would say, listen, if you're trading, let's say 100 shares, maybe exit half of it here and let the rest ride. Because if you had a week or two later, that 8-point gain could have turned into a 20-point gain. So in the beginning, use the basic exit. As you get more experience, learn how to use and stay in the trade longer. Because sometimes you have these tremendous runs. For example, here's an example in TWLO. We had a nice buy here. If you would have exited at the standard Donchian, you have a quick 6 points, and then it went lower. But you set up for another trade there. So you would have entered again, and using the standard exit, you could have made a 16-point gain, or more like a 25-point gain if you stayed in longer. So there's lots of things to take into consideration. No one knows how high or how low a market will go. You just try to put a little restrictions on to tell you when to enter and exit. So that's why we say these are basic format entries and exits. As you experience how to trade this a little bit more, you can edit it and alter it to meet your needs. Here's a weekly chart of the QQQs before the October sell-off. All right, just because we change time frames doesn't mean we change the rules. All the Donchians are headed in a higher fashion, and we are above the 50. We say the price sold off here in February, and then it rallied, but it never went completely below. We never had a bar below, so we didn't have a trade there. But look what happened here in March coming into April. We sold off, and we have a bar here entirely below. So this is our setup bar. You could have entered here in mid-April and made 14 points if you use the standard exit, or going into September, October, turn that into 26 points. Now, even if you don't trade the QQQs, you could have used this as a market directional tool, because if there's a buy signal in the ETF that represents the NASDAQ, don't you think that the market's going to head higher? Wouldn't you like to at least know that, well, we're in a buy signal for the QQQ, so why not I apply that? Maybe I want to buy another market or another stock and use that as my setup that the market should go higher. Now here's Google, all right? I know it's expensive stock, most people would trade it, but just to show you that it makes no difference what time frame and what price of the stock, we see the Dawsons are headed lower. We are just below the 50, even though we're touching it, we are below, and our entry would be below. Here's the first bar entirely below. Did we get short here? No, because we never traded below it. But here's the next bar. We're still below the 50. The Dawsons are still headed lower, even though this one's flat. It's been coming from a higher setting. So we can move our entry point up here. So now if we get short, we'll get short at a higher price. And as you can see, the very next day, we had a really nice short. Now, remember, it's up to you. You could have gotten out and said, boy, I have a nice profit on this day. So you could have taken your profits. If you bought the puts, it's up to you. We're just sharing with you some guidelines. But ultimately, you're going to decide how you want to trade this. Here's the guideline for the stop right here at this level. Now, the basic exit would be right here. You could have taken that and made, in 2 days, 46 points. We know this is an expensive stock, but you could have had puts and made some money there. But if you wanted to stay in longer after you've got a little experience, guess what? 125 points if you stayed in another week. So there's advantages to staying in, and oftentimes there's advantages to getting out at the required exit. It's entirely up to you. This is why we say you have to put the power in your hands. I'm not going to sit here and tell you on a daily basis what to buy or sell. Why? Because I don't want you to lose money. That would be almost ensuring that you're not going to make any money, because I would be taking you out of the game. Our philosophy is entirely different from most webinars you may have been going to. We don't require you to trade the way that the basic format is. We want you to use that so you understand it, but then we want you to apply your own persona. If you're an aggressive trader, well, stay in the trade as long as possible. If you're conservative, get out of this basic format. There's no one right or wrong way to trade any of our methods. Now here's that weekly chart of Netflix I opened up the presentation with. Okay, how could we have defined? Sure, we're going higher, but how do we know? Well, first rule, we apply the 50-period moving average. Are we below or above? We're above, so automatically we know we're a buyer. You see how we automatically know what side of the fence to be on. You never have to sit there and go, wow, the indicators are overbought. The institutions are having selling programs, and this major indicator I purchased for $2,000 is saying it's overbought, so I think I should sell this. No, what is the market telling you? It's telling you the overall trend is up. Doesn't mean it can't sell off, but for right now, we want to swim with the current at our back. What's the short-term trend telling us? That's the 21-period Dawson channel. Well, guess what? They're all in sync, and they're not in sync. They're all going in the same direction. Because if they were in sync, you wouldn't have this sideways while these are going higher. They're all headed in the same upward direction. So now the short term is telling us we have a short-term uptrend as well. So we have both of those in sync. So as we're going higher, price tends to hug and touch that top line. All right, it would be the reverse if we were going lower in a downtrend. But we know that that can't last forever, and we're looking for the pullback, the sell-off. And here it is. It starts to come. We touch and dissect the midline, and now we have a bar completely below. As we go lower, we're looking for that bar that is completely below. So this is our setup bar right here, because it is the bar that while we're above the 50 and while the Dawsons are headed higher, here is a bar completely below the rising midline. So we're going to buy one tick above, point above. It's up to you. And once we enter, we're going to place our sell below the low of that pullback. So we know that we've entered here, and this is our risk. All right, now we can get out for a quick profit at the top Dawson channel and take 16 points, or we could have stayed in for the entire year and made 270. That's how simple it is. Did we look at the earnings, or did we find out what's going on in the economy with Netflix and what their CEO is talking about, where the company's going to be going? Absolutely not. Did we listen to some trading guru, what his recommendations are? No. Did we look at the institutions and see if they're buying Netflix or, spend a lot on this program and in class to make sure that we're in line with the institutions? No. The only thing we did was apply a little structure in the form of two basic indicators and let the market tell us what it wants to do. Remember, everything comes from the source you're trading, and that's the chart in front of you. There's no reason to overcomplicate your trading. I used to do those same things too. I'm not just trying to preach here. Trust me, I used to have a screen full of like tons of indicators. I was listening to all the news events. I was in charge of making markets in 50 stocks when I worked on the floor of the exchange. So when I was, someone would tell you that traditional wisdom would say, don't you need to know about all those companies, about their earnings and about their forecasts and about their CEOs and what direction the companies are going? Well, I did all that, and it didn't make me any money. My mentor said, listen, Steve, if you're investing, if you're holding on to positions for 10, 20 years, well, then sure, you need to know about the company. But listen, you're in and out of trades in 5 minutes or maybe a couple of days. What difference does it make what the company is doing? Just follow the price. And then once I started stripping away all these things, what they called noise, this useless noise, well, that's when my trading started to become consistent. So this is all I'm trying to teach you. The same thing that helped me to become consistent, hopefully it will be able to help you. There's no reason to overcomplicate your trading. Absolutely none. All right, so let's see some examples that happened in the past few weeks, okay? Here's an example. I showed this. I took this example actually while I was in Las Vegas at the expo because this is in CTRP. As we can see, the Donchians are headed lower and we are below the 50-period moving average. Now, we had a nice bounce here, but we never had a bar completely above the downward moving Donchian channel, the midline. So we couldn't have taken advantage of that. But what do we have here? Coming into November, the first week of November, as price is hugging the lower line, we start to bounce, we start to rally. Here's our pullback. And here's our setup bar, a bar that is completely above the downtrending middle average line. So we want to go short one tick below. We can buy the puts. We can do whatever we want, however we want to trade. It's up to us. And we would have entered it the very next day. We place our stop above. And coming into last week, look how the market gapped down. All right, you could have taken a quick 5-point gain or stayed in 3 days longer into last week, which was 9 points. Now, someone saying here would say, well, Steve, there was obviously some bad news. You're right. Most likely, I don't know what it was because I don't follow the news. But there was some news that caused this stock to gap down. Right? Someone would say, well, yeah, well, you lucked out because you were most likely going off the news event or something. No, it's not required to look at news. You can look at news if you'd like, but there's no requirement to follow any news. So how did I know that it was going to go down? Well, I had no idea it would gap down, but I knew, trusting off of what the market was telling me, that it wanted to go lower. No one knows how low something will go or how high something will go. The only thing you know is that the market is usually giving you a sign of what direction it wants to go. Our job is to add a little structure and then just jump on board. That's all we're supposed to do. Here's another example, looking here in this was in Disney. As we see here, the Donchians are headed higher. We are above the 50. And right at this point, we had a nice sell-off. But even as we sold off, we see we're touching. Now, this is where your discretion can come in play. Some traders will say, well, Steve, we're only 1 or 2 ticks above. I can't use these as setup bars. This is where, you can alter and change. It's up to you. But if we're using the standard basic format, because this would have been a nice trade here, no, let's use the standard format, which calls for price to be entirely below. Now, the top of this bar was entirely below the rising midline. So this is our first setup bar. But we never traded there, so we lower that down to this one because we're still above the 50 and the Donchians are still moving higher. Once again, someone would say, but Steve, we're like below and we're closing just on the tick above or below the 50. Remember, where would your entry be? Always ask yourself. If your entry is below the 50, then you're right. It's not a valid setup, but the entry is above. So even though these last 3 price bars are intersecting the 50 and even closing below, your entry is above. So it's still a valid setup in Disney at the end of October. You would have entered the next day and look how we closed lower. Don't worry. These things sometimes just do not take off in your direction. Remember, it's all about consistency. Even if we have a losing trade, we know we're going to get stopped out here. But had you stayed into it, coming into the first week of November, that was a quick 6 points, and it was been the right thing to do to exit at the top Donchi. Now, here was the most eye-opening setup for the past week in Vegas, and a lot of people were saying this is too good to be true. Well, it happens all the time. Not that every trade is a winner, but you see these setups all the time. Here is the QQQs. I know a lot of traders like to trade them or at least use them for a market directional tool. We have the Dodgins headed lower. We are below the 50. As price is going lower, it hugs the bottom line, but then we begin to bounce. As we bounce, we touch the midline, but we're looking for a bar completely above, which was this bar on November 7th, I believe. So this is our setup bar. It doesn't mean we're going to short. We have to wait for it to trade below. And it didn't on the very next bar, so we moved our entry higher. So this is a good sign. Most people would say, well, how come we didn't go short? We don't care. As long as we can move our entry higher, we're going to go short at a higher price. All right, so this was the 8th now, and we would have entered, I believe, on the 9th. We place our stop above, and when I took this slide last week, we had a quick 8 points. I believe yesterday we would have actually had even more profit, or last week coming down to about a 10 or 12 point gain. We still haven't touched the lowest Dodging channel, but I took this slide this past week in Las Vegas, and at this time you had a quick trade there. Now you could have gotten out with an 8 point gain, or you could have said, I'll maybe get out half of my position and get out the remainder here. Or you could have said, no, I'm staying in for the long haul and I'll exit half of my position here and I think we're going lower and I'll let the rest ride. It's up to you. But this is how simple this is. This happened last week in the QQQs. And you still, if you're using the basic format, I believe you'd still be short this. Let's look at some quick E-mini S&P trades. We'll just go through them real quickly. As we see here was a setup. You made a quick 3 points. And remember, this is a 1 minute chart. So if you like to intraday trade on a minute basis, each one of these bars equals a minute. So in roughly about 10 minutes, you made 3 points, or you could have held on for 6 points per potential. Here's another setup, another quick 3 points or 6 points. All right. So in the basic format, you would have made 6 points or $300 per contract in roughly just about, I'd say about an hour or two. Here's a 1 hour chart. Same process. We have a buy setup right there. Could have taken the quick 10 points in 2 hours or $500 per contract, or held on for a couple of days for a potential of 36 points or $1,800 per contract. So that's intraday trading. We can also look at the Forex markets for you Forex traders. Here's the Australian dollar on a daily chart. A setup we had here, this was going back in August, September. Perfect setup, 140 pips or 1,400 roughly per contract. As we set up again, we're still in line. We're below the 50. The Dodgins are headed lower. Another setup. This was in end of September coming into October. 180 pips, all right, coming in the first week in October. Same rules apply. We're not changing anything because we changed the trend or we changed the market. The same rules can apply to any market, any time frame. In fact, here's the same currency pair, the Australian dollar, but now we're looking at a 4 hour chart. We have a sell-off right here. We could have taken advantage in about a day or so of 50 pips or 100 pips if we stayed in longer. And then when the trend changed, look what happens. The Dodging channels start to head higher in unison. We're above the 50. So we have a valid step to go long here. And you could have taken a quick 70 pips or stayed in for 140. So let's review before we go into question and answer, because I have a great offer for you. This is the same offer that I was giving in Las Vegas, and because I was speaking in front of hundreds of people, we gave them a great offer, but guess what? We're going to give you the same offer. Here's the review though. Remember, strategy number 1 is a trend following strategy. Its main indicator is a Dodging channel, so 21 period. It's a very moderate level 2 intensity. The entries are based on pullback, so we're looking for a defined uptrend, and then we want to buy prices, and we want to buy at a lower price. We're looking for a defined downtrend, and then we want to sell at a higher price. Strategy number 1, as I just showed you, can be applied to any time frame. It can be applied to any market and any direction. But please remember, all of our methods are about consistency, meaning that you will have losses from time to time. I showed you a couple of losses. That's perfectly okay. The main thing is you want to have a method that's able to recoup those losses, hopefully sooner than later. And that's what all of our methods are able to do. Consistency means 2 steps forward. Those are the nice trades you have, and 1 step back. Those are the losses that we have from time to time. So as we close here, and before you ask me questions, I want to ask you, do you think this strategy could have helped your trading this past year? We basically have a little over a month left in 2018. I know I say this a lot, but you most likely start at the beginning of the year like everyone else, with all these hopes and dreams, with all these goals of how much money you wanted at the end of the year, on how you're going to go on that dream vacation, or maybe have that addition to your home, or have that extra income so you can feel more comfortable about your life. And I venture to say, unfortunately, that the majority of you are nowhere near where that goal was. How would you like to get your trading back on track, okay, to finish the year strong with the remaining time we have, or to start 2019 in the right direction? Here's the great offer we have for you. We're going to offer you the Strategy Number 1 course. Now, this course usually runs for $695, all right? We're not going to charge you that at all right? So don't worry. We have a great discount for you, but we're not going to charge you $695. Included with this Strategy Number 1, I know it says stock here, but you just saw it can be applied to anything. Included with this special offer, we're going to offer you another strategy. This is Strategy Number 3A. I've spoken about it in the past. This is an entirely different method. Where Strategy 1 is looking for buying at lower prices or selling at higher prices, Strategy 3A is looking to capture those continuation moves where you have a really strong upward move, you kind of rest for a day or two, and then it goes higher. We're looking to capture those. Same thing to the downside. It's one of our best continuation methods, and it uses a proprietary setting on the Bollinger Bands. Guess what? That usually runs for $695. We're throwing that in as well for a great discount. Here's a couple of examples of how well this traded. Using our proprietary Bollinger Band setting, you see here that with a few rules we have, we know when the trend is going to continue. We don't know guaranteed, but off the rules and requirements, we have a great idea that it will. Here was a buy setup using Strategy 3A and TRIP, and look how it took off after that. Completely different from Strategy Number 1. Here was a sell setup and win at the end of September coming into October. We have a strong move to the downside. Most people would say, well, we're oversold. We can't buy this. Well, Strategy 3A said that it was going lower, and look at the nice move. This is all done through our proprietary Bollinger Band settings while adding a few requirements as well. We're going to throw Strategy Number 3A in as well with this great discount. Usually $695. We're not going to charge you $695 at all. And we're not stopping there. Here are 7 Traders Expo bonuses that we're going to include. Now, I know that the majority of you weren't able to make the Expo. We're going to still give you the same offer, but for a limited time only. Look at the extra bonuses you're going to be getting with this. First one, bonus number 1, the strategy add-ons for both Strategy 1 and 3A. So in other words, if you don't want to really use our platform, or if you are more familiar with your platform, we will give you the add-ons to upload onto TradeStation, Metastock, MT4, Sierra Charts, NinjaTrader, or the PTS Primo charting platform that we have there as well available. That usually runs for $18.90 for both of these. You're going to get that absolutely free. No charge at all. Bonus number 2, you're going to get full secrets of a specialist, stock specialist course. This is a course that we designed off of a book I wrote. This is a 3-hour video seminar that goes into a lot of detail, covering ideas and concepts. And this is a seminar I spoke at years ago that was roughly 3 hours. We're giving you the entire video seminar. It usually costs $9.95, no charge, totally free. Bonus number 3, you're going to get a signed copy of my book, or if you like a PDF version, you can just read it on your computer. That's a $49 value, entirely free. Bonus number 4, 6 months of our PTS Primo charting platform with real-time data. Okay, 882, entirely free. Bonus number 5, Secrets 2.0 course, $9.97. Okay, this is another upgraded version of the Secrets course that we had done. We've upgraded and taken it to the next level, $9.97, entirely free. Bonus number 6, strategy scanners on the PTS Primo charting platform. You can identify your setups for the next day, even for the next hour on your individual strategies. $495 value, absolutely free, no charge. And then lastly, bonus number 7, you're going to get our multi-scanner. This is the ability to scan for multiple strategies at once, because you're going to have 2 strategies now. You won't have to look at them individually. That's a $695 value, entirely free. These are 7 tremendous bonuses that if you purchase all of this together, all right, this is our Traders Expo discount. It would normally cost you over $7,000 for all this information. What you're going to be getting now is not $7,000. We're going to slash this price tremendously for the 2 strategies, Strategies 1, 3A, for all of the 7 bonuses that we've tacked on. We're only going to charge you $297. That's over $6,800 savings. All right. Now, this is for today only. This is a limited offer, so you have to take advantage of this. I know a lot of you are saying, well, sure, this is good. Okay, I'm saving $6,800, but I'd like to watch this video again. Well, we will send you a link to this video, but please remember that you have to act on this right away, because you can't say, well, I'll watch that video next week over the holiday and I'll come to an idea, because this offer will most likely be gone. So take advantage of this, because trust me, we know the year is ending. A year from today, you will have wished you became a member of all these courses and bonuses. Here you are at the end of 2018. Let's go back a year to the end of 2017, when you had all these hopes and dreams for the next year. All right. Don't you wish you would have had the same offer at the end of 2017 coming into 2018? You could have taken advantage of all the setups for strategy 1, all the setups for strategy 3A, and all the different bonuses we're offering. So why be in the same situation a year from now? Remember, strategy 1, strategy 3A are different methods, along with the PTS Primo charting platform, a $7,000 value discounted down to $297. All right. One day only. Take advantage of this. Here's how to get this great offer. Trust me, it's a fantastic offer. Our end of the year. This is put together with my sister site, Pro Trader Strategies. All you have to do is call them at 310-598-6677 if you're having difficulty, and you want some more questions answered. But if you're ready to sign up for this, all you have to do is go to the link at the very bottom. That's protraderstrategies.com/expo offer 297. Now, that's not a live link, but there is a live link posted on the chat box on the far right-hand corner. So all you have to do is click that on, and you will be able to go to the sign-up page, and you'll be up and running. $297, and have all these immediately shipped to you. Now, you don't have to wait by shipped. I mean through via email. There's nothing you have to wait for a CD or a disc shipped to you and wait 2 weeks to get all this information. You'll have it today, and you'll be having the rest of the weekend and the holiday week being able to go over all the rules and study. Another thing I did not mention is that once you become a member of any of my courses, you're a student of mine, so you have my personal email address, and you can contact me anytime with any questions or anything that you're not sure of or have a question about trading. So this is a great, great offer. You can have me as your personal mentor to ask questions via email. Now, as I promised, I said I would have the question answer at the very end of today. So please feel free to ask the questions now, and I will open up my question and answer box. I see a couple of you said you have no sound. I think the majority of you were able to hear, because I also have some people that are asking questions. So remember, if you weren't able to hear or couldn't see the screen clearly, most likely was your internet connection. So don't worry, we will send you a link to this recording. But to get that great offer, you must act quickly, okay? Bruno is asking, these red and blue lines are Bollinger Bands. Yes, that's the indicator. The green line was the 50-period moving average. Now remember, if you are used to using MT4 or Metastock or TradeStation, we will send you the add-on so you can add on those indicators onto your current platform. But trust me, why would you do that when you can just use our platform, which is already pre-formatted? In other words, the Donchian channels, all you have to do is click on one button, and you'll automatically see the Donchian channels pre-formatted. You'll automatically see the 50-period moving average, and you will get the up and down arrows for these setups. George is asking, can Bollinger Bands work in place of the Donchian? That's a great question, George. In fact, this was asked at the Las Vegas Expo, and I always say the same thing. Unfortunately, I've researched and gone through years of trying to find other indicators that can replace the Donchian, and they just do not give the same results. Because of the special way Donchians are formatted and the way they have that stair-step approach, that's what really helps you, get in sync and have some really nice setups. I know some people have asked about Keltner channels. A lot of people have asked about Bollinger Bands, but no, they really won't. You won't get the same results. Feel free to experiment, but you're just not going to get the same results. So I wouldn't recommend those, okay? Trevor is saying, do you have a setup for Thinkorswim? That's another great question. First of all, Thinkorswim, the way they are set up, they won't allow us to apply our up and down arrows or our strategies on their platform. And so that's too bad, because we have a lot of Thinkorswim customers, but they will allow us to use our data, their data, for free. So they say, listen, why don't you use our free data for the Thinkorswim, for people who are already using Thinkorswim, and then just apply it to the platform. So here's what you can do. If you are a thinkorswim user, you can still use thinkorswim, but you'll use their data. We will provide you with a free NinjaTrader platform. But once again, there's absolutely no reason to do that, because if you take this offer, you'll get our, I believe, 6 months of our PTS platform. And so you'll have it there for you right anyway. So it'll automatically, you'll be able to toggle back and forth. But it's not, we wanted to be affiliated with thinkorswim, but they won't allow us or anyone to put their separate strategies on their charting platform. So TradeStation, Metastock, MT4, Sierra Charts, they allow that, but thinkorswim doesn't for some reason. So it's not by our fault, it's just their rules. So that's why we have the platform. So you won't have to worry about that. I know a lot of people like to trade off thinkorswim or TradeStation or Metastock. So what we tell them is to simply, have a separate screen with our platform, toggle back and forth when the signals are generated, and then just enter your trades on thinkorswim. It's that simple, okay? So we've taken care of that and taken all the hard work out of it for you. So we make it simple for you just to enter the orders on whatever platform you're using, and then use our platform as an educational tool, okay? Great questions. Once again, this is a great offer. I strongly suggest you take advantage of this. You're getting $7,000, actually over $7,000 worth in material, things that have taken me over 4 decades to accumulate. You're getting them in one weekend for less than $300. I mean, you really owe it to yourself. I would almost venture to say that if you had a losing week this past week, like I know a lot of traders did, you most likely lost more than $300. Wouldn't you have liked to take that money back and use it for education, something that can help you to become consistent? That's all we're trying to do as an educational company. We're not promising the world. We're not saying that you're going to retire in 6 months the way some other webinars do. We don't believe in that. But what we do believe in is sound fundamental education that can help you to become a consistent trader. These are the things that turned my trading around. I use these methods on a daily basis to help for my personal trading. So if I feel comfortable with them, I would hope they would do the same for you and make you feel comfortable, and most especially help you to become a consistent trader. So remember, once again, if you have any questions about the platform, about the bonuses, please, there's no obligation. You can contact Pro Trader Strategies. They handle all of the discounts, all of the technical support with the platform. And if you have any questions going into that category, feel free to call them and contact them. They have consultants manning the phones right now. They'll be happy, no obligation, to answer any question you may have. But if you're seriously considering this offer, take advantage of it, because it's for a limited 1 day only. And after that, I don't want to see you spending $7,000 2 weeks later on this, okay? As we close, I hope you saw that we are sincerely giving a lot of attention to detail and trying to educate you. I mean, like so many webinars or presentations you may have seen in the past, they will give you a little appetizer, but then they'll say, in order to really trade this, you have to spend the $5,000 for the course or for the classroom. We don't believe in that. We want to educate you, and you can see in good faith, we're actually giving you an entire trading method for free. So even if you didn't want to take advantage of this great offer, you could start using this as early as tomorrow or Monday. I'm sorry. But this is just showing us our sincerity in trying to educate you. We're not trying to charge an arm and a leg so that we can make our money off you and say, okay, thank you, we'll see you later, good luck. We want to educate you because there's enough profits available for everyone to go around. There is not a finite source of profits and then it ends at the end of the year. There's enough, it's an infinite source of profits. So why not share what you've learned? There's enough for everyone to go around. So this is what we want to do. We want to share, to teach you, and to make everyone a consistent trader. I hope you got something out of this today. I wish you the best of luck, a happy new year. I hope you're not in the same spot a year from today. So take advantage of this great $297 offer by contacting Pro Trader Strategies. The link is posted in the chat box on the far right, or give them a call once again at 310-598-6677. Thank you so much for attending today. Have a great weekend, a great Thanksgiving holiday next week. I'll see you next time. Bye-bye.